Okay, so for Rovinsky, we're going to look at what will be the new net operating income if we move from selling 5,700 units to 5,300 units. So instead of recreating the entire income statement, we can do a shortcut. So we know that we have a current contribution margin when we sell 5,700 units of $131,100. And the problem doesn't mention changing any of the sales prices or the variable expenses. So I also know that my contribution margin per unit will not change. And my contribution margin per unit is my total contribution margin divided by number of units. And that is $23 per unit. This is for Rovinsky. Okay, so if it's $23 per unit, then I can say, well, my new contribution margin at 5,300 units will be equal to contribution margin per unit times number of units, which is 5,300. So my new contribution will be $121,900. My fixed expenses or my fixed costs do not change, $106,500. My new net operating income will be equal to $15,400. Moving on. My practice problem for Schister says, my sales will increase by 20%. What will be my new contribution margin? Well, if sales increase by 20%, I know that my variable costs will increase by 20%. I know that contribution margin will also increase by 20% because they're all proportional. So when one goes up, this is dependent on quantity, that goes up. This is dependent on quantity, that goes up. Again, we're just talking about changing my sales units, right? The number of units that I'm selling. So my current contribution margin is $120,000. If I want to increase that by 20%, I will multiply it by 1.2, 144,000, right? So this is the same thing as saying 120,000 plus 20% or 0.2 of 120,000, which is 24. Right, this gives me 144,000. That's my new contribution margin.